Good morning, everyone. Our session today is Resetting Your Finances Post-Corona. We're here with the lovely Teresa, and again, it's Todd Sivia, and we're welcoming Josh Lowe and Jake Hottenrott, and both CPAs, and Teresa's going to truly introduce both of those individuals. So go ahead, Teresa.
All right, so Josh, you want to begin? Todd, you want to start asking questions?
Go ahead. We'll try to do my best here.
So however you want to go, and I guess if we can keep, if you're not speaking, if you can keep yourself muted, maybe we can tune out that back noise.
So Josh, we've gone through post-corona. We're starting to get through post-corona, and what have we learned? Is there any kind of key lessons that you've picked up that maybe you've been advising clients over the years to do something, but they're finally realizing, hey, you were correct all along?
I don't know if I'd go that far, but I think I don't know all the lessons that have been learned, of course, but I don't think you can completely prepare for a situation such as this. I don't think anybody could. However, some of the resulting programs that are a result of this, it kind of shines some light on some things. I think we have seen that entities such as S corporations, when the PPP program came out, we had issues that all based upon payroll being paid and things like that. So making sure we're actually paying wages and have a proper balance between wages and distributions of profits to make sure we're eligible for some of these things as they come out. And I think that program kind of shine a light on that. If you want to talk about a result of this situation, I think that came about. With better preparedness, healthy balance sheets, I think building up reserves, and I've talked for years about having paying a lot more attention to business balance sheets to make sure that you can weather some of these things and be as prepared as possible when things aren't perfect. And so businesses, of course, are also being thrown around by political issues right now, and those are things that are out of our control as well. But we can only do our best and do what we can, I guess. It is very difficult for employees, just raising awareness. I think again, there's a lot of political things right now, and I don't want to go down all the political roads, but they are definitely out there. And hopefully small business people understand that America really is based on small business, and we really do need to focus on that aspect, because we want employees to be safe and secure as we go forward. I'm not sure what that's going to look like. I'm curious to see how this all unfolds, but again, a lot of this is politically tied as well. So
you mentioned something about distributions and taking wages. Can you explain a little bit further into what people were doing versus what maybe they should be doing, and why that strategy of taking more of a distribution versus the other way of taking wages has an impact?
Yeah, for years the IRS has tried to encourage S corporation shareholders to pay wages. I think there's been a strong pull to keep wages low, of course, to advantage of some of the Social Security and Medicare tax rules that are out there. However, You see this with the qualified business income deduction that came out a couple years ago now. They were really pushing for it to be limited to wages. So we saw that get limited in some cases with some clients that came in and having to tell folks that their deductions are limited because of that. Didn't go over quite so well until you try to advise them on how to properly structure those. There's no scientific way to do it. It all comes back to reasonableness. I think Jake will agree how this all comes about. So there's a balance between all these things, but the PPP program had a similar structure to it. It was limited based upon wages. So if there weren't any or there were very little, the PPP program was not as beneficial to some of the others. So again, nothing real scientific, Todd, to really tie anything to, but and Jake may weigh in. I really think that that's something that businesses should be paying attention to and pay themselves as they go forward. Not because of the PPP program at this point, not because of the qualified business income deduction, but really that's the way it should be.
Jake, what are your thoughts on that?
What Josh was saying was completely spot on with S corp owners needing to take wages and everything, and then even kind of goes down to having their employees properly classified on payroll and not trying to skirt them as independent contractors, because with these PPP loans they're seeing that independent contractors are having to file for their own PPP loans, so it's slowing down the progress if they're trying to get people that really are employees paid. Now, well, they're independent contractors, so it creates another whole level of administrative red tape that needs to go through to get people paid. So it kind of goes to business owners. You're getting rewarded right now for having done the right thing in the past.
Jake, I like that point. You're getting rewarded for your past performance, and I think that's extremely positive and a great statement. So talking about that, talking about the health of or actually having good financials. I think having good CPAs and all that is very impactful. I'm sure both of you guys were very busy during this period of time as well, trying to get financials ready. Was it easier for people that were organized and ready, or was there a lot of stuff that you had to prepare that you were seeing that took a little bit longer to help clients out if they weren't organized? Did you see any?
You touched on something that's really important, and again, just listening to Jacob's bio there earlier, being proactive with business owners, not waiting until the end of the year to do financial statements and get after getting your tax returns completed and things like that. That absolutely was imperative during this process. So a lot of folks who were proactive, most of our clients were able to get on the first go around of the PPP program because they were prepared. They had their tax returns done and or financial statements that they could walk in and participate in the program right away. So I think it is important to maintain good business records throughout the year. It helps with decision making. It goes back to Todd's comment earlier about being prepared as a business owner for things, helping with decision making throughout any year, whether we have COVID or not. But this just shined a light on it again. I think that those who were prepared and ready, they were definitely better served, because you read many stories across the country of these small businesses didn't have financial statements, they didn't have good records, so they weren't able to participate in the first wave. So
Jake, your thoughts on that? What was it like with your clients?
One of those things with being prepared is, getting the maximum amount of that PPP loan. Because if you're scrambling, you're missing things, you're, trying to throw numbers at a wall just to get something on an application, even though, you are certifying that it is true and accurate, but you might be missing, key parts of income, things that, would make your PPP loan a little bit higher, whether that's, health insurance that you're including, retirement, if all that isn't put together and ready to go, in a rush situation, things can get overlooked, whether it's by you, by your accountant, by your banker. And this PPP loan is, not necessarily to make somebody whole per se, but it is to fund your, payroll and, some of the overhead for this, 8 to 10 week period. So, if you're not prepared, it ends up costing you in the long run, which again, if you're, sloppy and not prepared on the front end and, working, monthly, quarterly, semi-annually with somebody to make sure that everything's locked down, it ends up costing you there too. So no, I think that the preparation is key.
One other thing, when we're looking at financials and being prepared generally for pandemics, I mean, I don't think anybody, this was not within my 2020 vision that I would have a pandemic that I'm dealing with. But with that said, what is a good rule of thumb or a good thought process with regards to, from a financial perspective, having within your business almost like a slush fund or a fund, a rainy day fund? Do Jake or Josh, do you guys have a suggestion or something to be built into your financials to be ready for a crisis?
One of the things that we look for, it really depends on the business owner's personality, depending on kind of what their comfort level is. If we're looking from a cash flow perspective, we would want you to have access to somewhere between 30 and 60 days of either, your receivables or, your gross income. That way, you can help fund it, whether that be cash, stashed away in the bank, or, lines of credit that you can tap in, in a time like this. And, that again goes to the relationship, with, kind of what you alluded to at the beginning with small businesses being important. The small banks are the ones that were the movers here. Big banks, you got tied up as a number. You got dropped, you didn't have a contact. But if you've had these relationships, having, lines of credit, where they're, annually asking you for tax returns and financial statements, and adjusting, your lines of credit and interest rates, you were, again, ready and prepared. So that's kind of one of the things that we try to help our clients, understand is, not only is it good to, have financials, but those relationships, end up mattering, when something pops up, because you can call somebody and say, hey, maybe I need a little bit more on that line of credit because we're not expecting to, collect all of our receivables. So that's kind of where we stand on it.
Josh, do you have any further comments on that, or?
I think Jacob hit the nail on the head as being prepared. I don't think there's a general rule of thumb that we necessarily follow all the time with cash on hand. I think it's there's a balance between leverage and having cash on hand, but having access to lines of credit and a healthy, again, it goes back to the healthy balance sheet and relationship with a financial institution that you can walk in the door and they'll know you're good for that loan, and if they can see that you've properly managed your finances, your business, I think they'll be supportive of those things.
I think that's the hardest part, that I work with. This has been heightened, like what you're saying, right now, if you had good records, everything, was easier. But to try to keep them going forward, to realize it's not just, right, when we're in something like this in the pandemic, but yeah, some of you know that, I have a mad passion for Marcus Lemonis. If you don't know your numbers, you don't know your business. And so, these are the kind of great things that you need to have all the time, but it really came out to shine, on the light on it of how important it was, I believe.
One element that we're also seeing quite a bit of, especially with the unemployment rate, business owners for the first time are filing unemployment. And there's a lot of independent contractors or solo proprietors and things like that are not getting unemployment as quickly as somebody that is a W-2 employee. Does that have an impact or have any, from a financial perspective, does it make any sense changing that moving forward, becoming more of a W-2 employee versus a more self-employed?
I guess I've seen it a little bit with small business owners, sole proprietorships, again, having the support of the unemployment. I think our economy has shifted somewhat to see a lot of these sole practitioners that are out, again, making their way, but due to tax law, they're not employees, and they've always been stripped of the right to get unemployment. And typically you don't see situations such as this come up. And it could potentially be abused if it was just wide open for folks such as that to have access to unemployment that typically they don't pay into. But the pandemic, I guess, situation shined a light that, we all have to pay our bills, and they all have to do these things. And these folks were vital to the economy previously, and they should have been also treated as such during this period of time. I don't know that it's going to change permanently. That's my opinion.
Yeah, and I think I'd agree with Josh on this. It is, it's a hard thing for a lot of the, independent contractors and sole proprietors who are self-employed to suddenly add, another layer or two of administration and payroll cost and unemployment cost for, hopefully once in a lifetime situations like this. A lot of times, the kind of nature of the independent contractor and sole proprietor work that we see is, either seasonal or job to job. Many have consistent, a lot of consistent work, right after the other. But overall, it could lead to some abuse of the system. As well as then, somebody does have to file those, unemployment reports. There would have to be wages, and they'd have to be set up as an entity that could pay themselves wages. So it might not be, a long-term benefit as long as we can have some sort of safety net in place that, seems to be coming from the CARES Act to help these people. So.
Anything else that either Jake or you Josh, that raise the spotlight on that we need to be thinking of from a financial perspective or accounting perspective that we need to evaluate moving forward?
Going back to that preparation and being proactive. I mean, Josh said it when he said that his prepared clients got onto that first round of PPP. I mean, that was your clients who were ready and prepared, who you had your monthly, quarterly meetings with, who had engaged you to do their bookkeeping and payroll. I mean, that was as simple as running a few reports, having a conversation with the bank, filling out the application, and then filling it out again when the SBA put out a new application a couple days later. It was that simple. But if you're a sole proprietor who comes in with your scratch paper at the end of the year, now we're trying to put together a Schedule C for you so that you can all of a sudden fill out this loan to have something. You're not sure what costs are really able to be paid. So I go back to just it really actually matters to have your accounting work done, and have conversations with your accountant and your CPA, and really dive into those numbers so that when it comes down to the time to use those numbers, you're prepared. It's kind of it's like dieting. It doesn't all happen all at once. It's that little bit every day of having a good nutrition plan. It just and then you end up suddenly healthy. Just like looking at your numbers every weekly, monthly, quarterly, annually. And you work with that person that knows those numbers, which is your tax professional, your bookkeeper, your CPA. And you understand them. When it's time to use them, you can pull that out of your bag and get after it.
Tax, delaying your taxes or delaying paying into your taxes. Can you guys, Josh or Jake, can you guys explain whether or not that's a good move or not? I think that came out of either one of the CARES Acts allowed you to delay payment of certain payroll taxes. Is that correct?
Yeah, there's different provisions within the CARES Act related to payroll. Some of them are tied to the PPP program, some of them are not. You can delay payment, you can get some credits. Just depends how impacted your business was, your employees. There are a lot of rules in there, and I think there are different spectrums here. You have some businesses that are completely shut down. You have some businesses that are able to operate somewhat in a limited capacity. Some businesses are operating in full capacity. So yeah, I mean, each situation is different, and I think you have to pick out the program that best suits your situation, given the circumstances that exist today, and what may be happening today may not be the same thing that's going to be happening next week. As Jake said, that we have a lot of things are in flux. I mean, even programs that were passed and you thought knew what it was, you really didn't know what it was. Well, this is what this means and this is what that means. A lot of clarifications and FAQs have continued to pour out about certain things, and I think that'll continue to happen. I think there's still some clarification needed on some of the PPP plan provisions. And I haven't seen any of the forgiveness paperwork. We don't know what that's going to look like. There's tax consequences. The IRS came out, and initially Congress said it was going to be a tax-free situation, and didn't mention the deductibility of the expenses you incurred. Some rumblings have came out now after the IRS came out with a statement that you're not going to be able to deduct the expenses now. Some folks are saying, yeah, that's what we intended. We wanted you to be able to still deduct the expenses. So I'm curious to see how this all unfolds throughout the year. Tax season was definitely interesting. A lot of people were asking questions, but it's hard to answer questions when you don't have all the clarification. And I think there are still areas where we can advise based on what we know today, but that doesn't mean what it's going to be a month from today.
I think that's the biggest thing that all the business owners have to remember is to be patient, on it. And, as the things in the first round, were changing, and now we're watching it again. They were getting angry, and they were thinking it was the CPA, it was the banker, it was this, it was that. No, it's the government, like everything else, and they're trying to do the best that they can to serve, in the minute that they're serving you.
Jake, do you have any comments on anything that Josh said?
Yeah, I was just gonna say, I think patience is the key here. You know, Josh can probably attest. I mean, you know, we had to go from, you know, as normal of a tax season as we could have, to all of a sudden having 880 pages of a new act laid on us as we're trying to figure out, you know, how to get our, you know, own companies up and running, you know, virtually, you know, and, you know, doing our own social distancing, and then trying to decipher what the government, you know, what Congress is trying to write in this act. Um, and then, you know, trying to advise clients, trying to prepare individual tax returns. It's been, you know, especially when it's been a moving target with changing legislation. You know, Josh nailed with you know, the intent of Congress was to have, you know, have those deductions. The um, Internal Revenue Service came out last Friday afternoon or Thursday afternoon saying, no, those aren't deductible. You know, and just yesterday the AICPA said, no, they're supposed to be. So let's get this clarified from Congress on what their intent was. You know, and the same kind of goes for those economic impact payments. You know, the stimulus. You know, that there's no clawback provision. You know, and the IRS was sending out these payments, you know, as quick as they could. They sent them to a lot of deceased taxpayers, and you know, without a clawback provision, you know, and people hearing this, you know, they're spending this money, and you know, now Treasury kind of released something, you know, during a press conference that, hey, we kind of want that money we sent to deceased taxpayers back, and now the IRS officially yesterday, you know, released something that said, hey, we need this, we're going to need this back. You know, I mean, it creates a lot of headache. You know, a lot of people, you know, who have gotten these payments, you know, if they've spent them, it's going to be hard to get this back. So I would say patience in a lot of areas this year is going to be key, because the PPP forgiveness hasn't, there's no guidance out there yet. We know what it should be, but we don't know how it's going to be interpreted. I think most of the loans that I've seen from my clients have 1 or 2 lines or a half a page that say, you know, if you meet the provisions of, you know, the SBA, will forgive the loan, but it doesn't say what those provisions are. So I'm telling everybody, you know, patience and being conservative. Assume that those loans are going to need to be paid back. But here's kind of what the guidance is, and we kind of think it's going to go this way, but don't be surprised if it doesn't.
Explain to us the difference between, from, you know, maybe from a balance sheet perspective, or, you know, just generally, what the difference between non-deductibility versus deductibility. I mean, how would that, you know, how would that play out? If you can be able to answer that without going through a diagram. So, yeah. Do you want to take a stab at it first, Josh, or?
Yeah, I can try to take a stab at it. It really is. I mean, without getting out the diagram, as you suggested, it would be a pretty easy situation. Basically, all the funds from the PPP program are essentially being treated as a loan. Typically, when something would be tax exempt income, like or you had to repay something, a loan wouldn't be considered income. How this program's working is it's being forgiven as long as you spend it on certain things. As Jake alluded to just a second ago, he said that, you know, initially it kind of was said that these things are not going to be taxable, but also that you'd be able to deduct the expenses. And when they said that, you know, to a CPA, I mean, I was suspect on that, but I think that was what Congress had said initially. And if they get back to that, like the AICPA coming out and saying, yeah, this really, they are lobbying Congress right now to get this to happen. But essentially, if you can put this and wrap your mind around this way, if you pay your employees $100,000 and you use the PPP funds to do that, so you really didn't have to use your own money, and then still be able to deduct that $100,000 expense against your operating income when you finally do get back up and going, you can see that that would be a huge benefit to business owners, because you're being able to deduct a business expense that you really didn't have to run through your income statement as income to be able to pay that. So that could be a great thing for businesses as we go through the year. But currently the IRS did come out and say, hey, you can't deduct something that you paid with tax exempt income. And that's what's currently out there right now. So that's how we're proceeding with our clients is, hey, let's not plan on being able to deduct these things for now. However, there is a push in Congress and with some of the CPA organizations out there that are trying to get back to that. So we'll see. Patience again, as Jake said.
And that is so hard. I work on that every day.
I've got 3 little boys at home, so patience is truly a virtue.
Both of you guys with your 3.
Yeah. So
Yeah, I'm with you, Josh. I got a 4, a 2, and a 1-year-old running around upstairs, so I patience.
all right. Anything else you guys want to add to on the PPP loans, or anything additional to considerations and things of that sort?
I would just say, as you're getting your PPP loans funded, make sure that you're, planning your 8 weeks out, because you're getting, 2.5 months or 10 weeks of funds, and you've got an 8-week funding window that starts from the date it's funding. Now, again, moving target, there's been legislation questions on trying to get that moved to, the start of the first pay period following the funding, or, a couple of different ways to look at, your forgiveness period. But, when you got those funds, make sure that they're being planned. Make sure that, you know how to maximize that forgiveness, that, you're hitting your 75% payroll, that the other 25% that you're wanting, is used for those, utilities, and what's included in those, the rent or, the mortgage interest piece for your business. Don't spend it willy-nilly, because you'll end up, with a loan that might not be forgiven. So again, it goes to that planning and, being proactive. So I've told a lot of my clients, that day that you get it, let's put together an 8-week plan on, what our worst case scenario looks like as far as spending and payroll, and then what is our best case? How do we get this into, the most employees' hands and, make this the most efficient for your business? So I think that, the time to look at this is not in 6 or 7 weeks after you've funded it and say, did we do this right? But it's really the day of the loan. You've got it funded. Now what do the next 8 weeks look like? So that's I think my biggest takeaway with the PPP loans is it's a great opportunity for the business owner. But again, you got to plan today, not tomorrow.
I have a question of just, some chatter that of course has been coming across, social media. And I haven't put a pen to paper or, actually looked at a scenario, but many people have been trying to warn that if you didn't increase your payroll in 2020, if you weren't doing any adjustments, then the 75-25 rule may not work out, and there might be, some money that would be, not forgiven. Have you guys, heard of that, saw that? Is there any truth you think in that?
Well, I mean, I'll speak to it briefly, and we'll see. Jake may have some other thoughts as well. But you're trying to squeeze 10 weeks of payroll expense into an 8-week period, and you have that's really impossible without some tweaks, of course, to payroll. So I think we have a a chance to review that. And a lot of people don't have rent. Again, the small business owners, some of these sole proprietors and things, and that's where that fund may have to be repaid. But I've been talking to clients a lot, and I'm sure Jake has as well, as Teresa said, putting a pen to paper to say, my business is completely shuttered. I have no revenue coming in. I've got this PPP loan. However, if I use it to bring back employees, I have to pay the Social Security tax. I have to pay the Medicare tax on these people. This is not part of the PPP program forgiveness. Should I, as a business owner, use this, or should I just let the PPP money sit there and wait and potentially repay it at the end? It's a 1% loan. Is that better than paying 7.65% for Social Security and Medicare taxes and all the other related potential taxes you would have as a business owner? Again, assuming you cannot have your employees doing something of value. And a lot of people across the country have also heard from employees who are on unemployment. They don't want to come back off of unemployment to come back to a workforce where they're potentially going to make less than they were on unemployment. And so there, again, this goes back to this political realm. Is this what they really intended? Are they really going to keep this 8-week period static? When they made the 8-week program, did we have all the shelter-in-place orders, in their heads? Restaurants and bars are probably, to me, going to be one of the hardest hit entities, because they may not open. Who knows exactly when they'll open. Illinois put out their plan on reopening across the state. We'll see what exactly happens, but these things are going on all across the country, and we're going to see changes in that industry because of we all know how restaurants work. Jake, I'm sure can acknowledge this. The way you make money as a restaurateur is to get as many people turned on tables as you can with social distancing. Is that even going to be possible anymore? Rent rates will have to be revisited probably in some of the places where you had congested tables, counter space, all these different areas that we lived with previously. That's how the world worked. I don't know that it's going to work going forward, given this situation that it currently exists. Now that can be changed in a minute with a vaccine, but these are all contemplations that are still up in the air. And again, I hate to say it, but it does. It just keeps going back to patience. We'll see what they actually come out with. I'm still holding out hope they do have an extension of the 8-week period, at least until people are actually open and able to transact business. But that's not what the law is today. And I think it goes back to, again, Jake said it right, again, planning out those things and doing it on the front end, understanding, hey, if I do this, then that. But should I even do that? Just to spend something to get it forgiven? And I think talking to small business owners about those options is extremely important, and it does take time. I mean, there's no doubt that they need to talk to somebody, whether it's their banker or their accountant, and just show them what it really means, because there is a lot of misinformation that's out there. So that's my 2 cents on it.
Thank you.
Question. We're going to switch from business to individual. With the stock market reducing and value, is this a good time to look at or evaluate Roth conversions?
Yes, final answer.
Yes.
I think that it's a great time to look at, especially if you're looking at compressing, assets that, had appreciated greatly, and you're going to hold those for long term. Tax rates are still, historically low. You had a great opportunity at the end of February, early March to, move a lot of funds over into a Roth, at a compressed rate, and meaning that, if you had 100 shares of, Boeing at 400, that's a huge number to roll over and a lot of taxes to move over. But if you moved it over at 93, you're essentially paying tax on, 25% of, the what you might consider the true value. So we had recommended it quite heavily, but again, it took a lot of guts for people to want to make any move, let alone a stock market move. So Josh, what were you seeing on that?
Yeah, we've seen some of that as well. We've had, again, having a great financial advisor. I think some balance there in conjunction with the accountant, the tax side of those equations. We did see some of the conversions taking place, and I agree. To me, it was a great time to do it. If this was even remotely on somebody's mind, and a lot of times it plays into estate planning and everything else. And I know we're touching on Todd's realm there, but those are great vehicles. There were a lot of rules on potential distributions from retirement plans, loans changes in the CARES Act, a lot of different things. But the Roth conversion, definitely, this was a time that somebody should have really contemplated if it was remotely on their radar screen.
Back to conversions, and while we're on that subject, in the CARES Act, there's a provision with regards to loans or taking money out and delaying that for 3 years. Could you take that money and move it to a Roth and delay paying it for 3 years, or what's it, getting into that realm? Is there any suggestions or ideas on that?
And with that planning opportunity, I'll be honest, that's something I haven't had a chance yet to completely dive in. One of the investing groups that are groups I deal with are real estate investors, and kind of some of the strategies gone with taking that loan now, funding real estate ventures, and then looking at that payback period from that. So again, I think it's a case-by-case situation, running those numbers with your CPA. But outside of that, I think that's a future planning thing for the summer, maybe once this second half of the tax season ends in our practice. But Josh, have you guys done anything with that?
I've seen all kinds of different things, different situations kind of thrown out there. I think some of these provisions, I think we've got to be careful of. Again, moving targets. They left enough ambiguous language in some of these things to me open the door to some opportunities for folks who needed the money to pay down credit card debt and some of these other things. If I can't remember the exact phrase in the act right now, but it was such that if you had an economic impact from COVID, and I think all of us have had that to some extent. Some more than others, of course, but I have looked at a couple situations where some of those things are definitely going to be explored. The variable here is what are tax rates going to be in 3 years? If you do backload something like that, are they going to make you amend tax returns? These are some of the issues that are out there with the distribution today. In theory, spread it over 3 years or recontribute it back into a plan after the 3 or in the third year period. I think there's opportunity there, definitely. The question is, there's an unknown aspect that we don't know what business is going to look like either. So I've thrown the options out there at some clients to say, hey, if we can get in this realm, should we not at least consider this? And if nothing else, we can always amend something to go backwards and undo. But there's time limits on these things too. I think the loan provision, it might end in September if I recall correctly, and the distribution provision, of course, ends at the end of the year. So we'll see, and maybe we'll get more clarification I hate to keep saying it, but Jake was right. Patience, I think, on some of these things. We'll just have to see.
All right. Any other question or any other comments or questions?
As I say, is there other things with with both of you besides? I mean, I know the Roth conversions, were big, and of course looking at all the things that we know and still need to know about PPP, but other discussions that you were having with small business owners about any financial impacts, any just general education or things that they should think about.
Kind of what we've been, really kind of walking through with people is, what does your cash flow look like, in the current environment? Because it's not only affecting your business, but it's affecting your suppliers. It's affecting your ability to sell. So, we're kind of taking that, consultation approach of, we know what we know today. We know things are going to open up over time, but how long does that take? What's your break-even point? Where are you going to be able to, find the cash flow, to continue operations after this 8 to 10 week, period, for the PPP? How much does it need to open? And two, the bars and restaurants. That's a very hard thing. We've seen a few of the local places, that have, had small staffs that are running, great drive-through operations right now. They're probably doing just fine. But at the same point, anybody with sit down, anybody with bars, alcohol sales. I mean, this is, you look at just 2 days ago, Cinco de Mayo, you may have had restaurants, doing drive-through, drive-through and to-go margaritas, which was great, but I mean, that's their biggest day of the year, and for good reason. It's a great celebration day, and typically outside seating galore and lots of turns and lots of high margin drinks. But that all evaporated. So trying to plan out not only the next 8 to 10 weeks, but the next 8 to 10 months. How much business has to come back to get back to even something resembling full capacity in your business, because in 6 weeks, we went from, record years and, tax strategy to nothing and, survival mode and, how can we scrape by and where do we find the funds for this? So it's unprecedented, and, I've been doing this for, a decent chunk of time, but I've never seen anything close to this, even, going through the recession. So I think that, the biggest lesson here is, planning, patience, be proactive. It's all going to pay off in the end. And if you're just sitting there waiting for the phone to ring, it's probably not going to work out for you. So that's kind of what we've been working on with our clients.
Josh, do you have any comments or to that, or?
No, I think we just got a big variable, as we said before, as we go forward. What will business look like as we emerge from this situation, and working with the local politicians at the national level, state level, and then local here, to what will the business environment look like. It'll be interesting as we go forward, and I think we're all going to just have to have flexibility and be able to jump on advising clients as we go forward and we see what things start to look like, because I don't think it's going to be business as usual for a long time. And and it may not ever get back to the way it was. As Jake said, we were coming out of a period with record volume, and the economy was clipping along pretty well. And we'll see what happens. A lot of fear in the economy right now. People are ready to get out and get after it again. I think you can see that as you go out to Lowe's and Home Depot and some of these places over a weekend. It's packed. It's just it'll be interesting once they finally let people to start to come back out, and how they will allow businesses to welcome guests back into their establishments, and if guests will be comfortable again going into a bar and a restaurant. So
I think, when I'm working with my clients, of course, I'm trying to get them to do a strategic plan and think out a year and then maybe think out 3 years. I know that, 10 and 20, we just can't do anymore because the future is fast, a lot faster than what it was. But I'm hoping that, like with what you said, Jake, those businesses who have not planned before like that, just for even year-end goals, planning now to look, because like you're saying, missing Cinco de Mayo, they also miss St. Patrick's Day. Belleville is going to be heavily impacted by not having art on the square. There's all these things that are going to continue to not be what maybe they expected. So trying to plan, figure out, we'll still be pivoting. I guess that's the basic thing. Everybody's talking about pivoting, of course, now to get started, but I don't think pivoting is going to end, maybe at the end of the year. Because like you said, there's going to be new normals. This is going to take a while. If we get back to what will finally be the new normal, how long will that be? And how much, revenue potentially could be lost, or pivoting towards something else to bring in a different revenue source.
I agree 100%. I think of Ballpark Village. I think of even people going out watching baseball games, football games here in our local community as we go forward. It's a ripple, and we're just going to have to see what actually transpires. I think the Dolphins came out and said that we're going to potentially have 15,000 seat capacity in a 70,000 seat stadium. It just, and all the surrounding businesses to all these different things, and in our local economy with the Cardinals, I think it's the Blues. It's just it's all over. It will be interesting. I just don't know what it's going to look like. So I think pivoting, as you said, is right.
Josh, I heard the LA Rams said they'd be happy to have 15,000 in their stands.
That's great.
Now, I really appreciate Josh and Jake for you guys coming in and discussing these hot topics, and we appreciate your time and appreciate all that you guys are doing for small business owners out there. From both Teresa and I, all those who are attending and listening to this on the replay, we really appreciate you guys listening. And if you have any comments, we'll send out we'll have Josh's and Jake's contact information. And again, Teresa and I really appreciate everything everybody's doing to be here and working on this presentation to help our business owners out to get them as much information as quickly as possible on all these current topics. So again, I appreciate it.
Thanks
for having us.
Thank you both so much. Everybody have a great rest of the day.